Today, we're talking about the economy, which of course includes inflation, as well as a whole list of other issues likely to impact the markets in a major way in 2022. So here to discuss this also important topic is my good friend Jeff Small, president of Arbor Financial Services, a retirement income store in Melbourne, Florida. Jeff, as usual, great to be with you.
Great to be here, Dave.
And we also have today's special guest, Jim Rogers. Jim is chairman of Rogers Holdings and Beeland Trust Incorporated. He's also a very popular financial commentator. Jim, great to have you back here on The Income Generation.
David, I'm delighted to be here, but David, I'm just a simple person. We don't need much introduction.
Life is like a box of chocolates. I get it, Jim.
Yes, exactly.
All right, so let's let the fun begin, Jim. So listen, let me tell you what I'm dealing with lately. I'm dealing with consumers whose minds are poisoned and terrified of the oncoming hurricane or storm a la a financial recession. So your predictions from January that we discussed and forward are fastly materializing. So what should investors brace for? What should they do today going forward? Because we really want to focus on them because that's what's important today, Jim.
Well, first of all, Jeff, people should only invest in what they themselves know a lot about. They shouldn't listen to me or anybody else. Stay with what you know if you want to be successful. If you listen to me and something works, you don't know what to do. You don't know why you bought it. If it goes down, you don't know what to do because you don't know why you bought it. So please stay with what you know. I am convinced we're going to have a very serious recession in the foreseeable future. And if we do, you better know what you're doing because it's going to be bad.
So the problem with that, Jim, although that's great advice, is that most people know the stock market, maybe indirectly through stock mutual funds, but they know the stock market. And of course, the problem is in times of, as you've recently predicted, an extended bear market, or even as you just said, a recession, when the tide goes out, all the boats tend to fall. But the stocks are what they know. So how does an average investor fix that?
If that's all they know, be sure you invest only in stocks that you know a lot about. But I would also suggest you start learning about other things because in the world economy, there are interest rates, bonds, there are commodities because we all need cotton and sugar and iron. There's not just, there's bonds, there's stocks, there's commodities, there's a lot of stuff going on. There's property. Please, it's not easy. I wish this were easy. Oh, David, I wish this were easy to get rich. But you and Jeff both know it's not easy getting rich.
That's right. That's right.
No, it's definitely not easy getting rich, but I heard something really bizarre yesterday, Jim. Janet Yellen, in a congressional testimony, signified to Russia that as long as they don't stop their oil exports, the globe won't go into a recession. And I just about fell off my chair when she said that. And I reflect back to an earlier showing we had this year in January where you said the people at the Fed, to put it politely, weren't very smart. I think that was validated. I couldn't believe she did that. What do you think?
What can I say? She's got 2 degrees from fancy Ivy League universities, but please, I know that doesn't mean anything. And she has proved over and over again, but they all have. They all prove many times they don't know what they're doing. And the problem is, Jeff, you and I are the ones who have to pay for it, and everybody watching this show.
Oh, we're paying for it all right. Gas is just a penny below $5 a gallon, and people are starting to shut down here economically. That's a threshold for most average consumers here, and they're saying, wait a minute, now we can't spend money on everything, and anything. Gas is just too expensive.
But Jim, you seem to be saying that, or hinting toward, I want to make sure I have you correct, that we're going to go into a recession, perhaps a really serious recession, which in theory at least, that in of itself should solve the inflation problem. Isn't that correct?
Not necessarily. It did not solve the inflation problem in the 1970s. The
Stagflation.
inflation problem got worse because they kept borrowing money and spending money and printing money.
Yep.
No, it's not that simple.
Okay. I love it. You're right. Stagflation. And I talked about stagflation 6 months ago on being interviewed on a major network, and everybody thought I was crazy. The host was like, stagflation, really? And now we're starting to hear people talking about that in the media because it's becoming a serious concern. Right, Jeff?
It is. And another serious concern is everything we're hearing in the media, Jim, is about the next leg down in the market, that this is just a false bear market rally. And so what's your thesis going forward, Jim? I know it's really hard to consult the crystal ball and everything's based on statistics and educated guesses here, but you've got so much history and knowledge. Tell us what your thesis is going forward on where we see the next leg down, or will the market trend up from here?
Jeff, I make plenty of mistakes. I make many mistakes. We could do a week of shows about my mistakes. So don't think I know what I'm doing. But I will say there's a lot of pessimism around right now, huge amounts of pessimism that often leads to a big rally. If something happens, such as peace in Ukraine or who knows what, it could lead to a huge rally. In my view, that would be the last rally. And I hope I am not sold short yet. I have not sold yet. But if that happens, then I would probably start selling and selling short.
So you're thinking it's going to get, make it another dead cat bounce, if you will, in the market. But after that, you think we're going to put in new lows in the market below which what we saw just about a month ago.
David, the next bear market's going to be the worst in my lifetime. We had a big bear market in 2008 because of too much debt. Since 2008, the debt everywhere has skyrocketed all over the world. All over the world. So it's going to be a huge bear market next time around. I'm not trying to scare people. I just want people to do their homework, figure out what's going on, and be prepared.
Well, I think on that debt note, Jim, the market is really codependent on the Fed and the central banks globally continually propping up stock values by lowering rates, going negative, or printing up more money. And I see it just as a repetitive cycle. I mean, it really just is paper. They're never going to pay the principal back on that. They could hit the delete button and it all disappears and nobody would care. So the whole thing is based on maybe a pyramid, you could say, or even a Ponzi scheme.
Well, I wish it were that easy, Jeff. We just all print money all day long. The Bank of Japan guy goes to work and he says he prints, his word, unlimited amounts of money. If that's all it's going to take, hooray, hooray, hooray. Won't it be wonderful? None of us ever have to work again. We never have to work. We just have to print money. It's not that easy, and it's not going to be that easy this time around. If they do just print money, inflation is going to get very, very serious. The currency markets are going to cave in, and interest rates are going to go through the roof.
Well, I guess you answered my last question. I was going to say, if you're expecting the worst recession of a lifetime, and the Fed's response to that is always to push down interest rates, as crazy as this may sound, is it possible that this may be a time to lock in some decent interest rates and things like longer-term, high-quality bonds or things like that? But it sounds like your answer to that is no, because you're expecting more of that 1970s stagflation scenario.
Yes, there will be times when interest rates will go down. The central banks around the world have that much power, but they cannot control it forever. And David, the more money you print, eventually people like me say, wait a minute, I've been to this rodeo before. This is not my first rodeo. I know how this is going to end. And we know that in the end, interest rates are going to go through the roof if they could continue to print huge amounts of money and we have big inflation. I know how this will end. You don't have to believe me. Look it up. It's pretty simple.
Jim, it's funny. I agree with you 100%. Eventually that will happen because our currency will get debased and we'll have much more higher rate of inflation that's much more permanent. All we can do is hope and pray that we have a couple more rounds before that worst case scenario happens. So we'll have to have you back soon to get your play-by-play on how things are coming along. And don't ever forget, life is like a box of chocolates. Jeff Small, Jim Rogers, thank you both for being here with us today on The Income Generation.
I love being on with you guys. Let's do it again.
Thank you, Jim.
Thank you for watching today's video, the do's and don'ts of starting a business in retirement. If you enjoyed it, please click the thumbs up button to give us a like and make sure that you subscribe to our YouTube channel for new content each and every week.